This is Justin Pulitzer. This is my weekend review for December 21st, 2014. Happy holidays. Let's dive right into the chart and get cooking. This was obviously a very big week with the Fed, and we are obviously coming into a holiday-shortened week next week. Just a heads up, I believe Wednesday is a half day, Thursday is closed, and then Friday is a full day again, although it'll probably be a little bit slow with volume-wise. So with that backdrop, let's jump right in. So the S&P had been coming down, as we know, it was starting to look a little bit bearish, but I had said as long as we held this 199.06, I thought that the correction was still fairly healthy. We did violate it, though, a little bit over here. You can see on a closing basis, we did close below that line. And I had said if we closed below there, that it was potentially potential that we might see this 200 MA down at the 50% fib. However, we reversed pretty quickly here, and then we had, this was on the Fed, and then we had a gap and go over the downtrend line. And you guys often hear me refer to gaps as professional or exhaustion. In my book, this would be considered professional because it did come over the downtrend line and it held. And then you can see on Friday we were sort of had a bit of an inside day, holding up closer to the highs, although there was a little bit more of a liquidation break into the close, which I sort of attribute to just day traders closing up positions and maybe some profit taking into the weekend. So some interesting stuff happened besides that this week with our little Hanukkah rally that Janet Yellen gave us here on Wednesday. But you can see in SPY there's a very large topping tail here that came up. It's like a $5 plus spike here and then came back down. Now, a lot of people have been talking about this being a phantom tick and a bad bar, but that is not true. In the last couple of seconds of this close, there was an algo or something that must have gone mad, and there was sort of a bit of a reverse flash crash up, and it traded like 1,147 ES contracts, or the equivalent of 610,000 shares, and this thing just absolutely screamed up and then came back quickly down. Now, the question is, I'm a bit of a conspiracy theorist when it comes to the algos, and I think they tend to cache these levels and then move price to them again. So I would mark on your charts 212.97. Let's set an alert right now, actually. 212.97. I think that area is possible that it could come into play. I don't know how long it takes to get there, or if we get right there, if we have some type of a correction first. But I do think that is an area that algos may try to retest. So with that said, we're within spitting breath or whatever, spitting distance of the all-time highs here, and I would think if those get challenged, that we may make really some new highs for the year. That said, if you're concerned, if you're a little bit late to the party long, I would say that the low of this day on Friday is probably not super duper significant, although you may have some shorts try to press. They might be looking for some type of a gap fill. These were the old reference highs before, the 201.90. So I think anything over 201.90 still kind of remains bullish into, into year end, although there's really not that much more left. On some type of a gap fill, this area might be a buy for a play back higher. I do think, though, if we take out Friday's highs, we'll retest those old highs and maybe beyond. So if you're looking to play long, I would say your stop is somewhere between this 205.61 low and the 20 MA, which is 205.31. If you start getting below the 20 MA, it might get a little bit dicey. I don't want to play within the body of this bar, if you know what I mean. I think this is sort of just range and reference, and I would rather be playing long for range extension rather than in this bit of a chop range. So I'm either looking for short below or long above the body of this bar. So if we get a little bit more specific, I would say around this. Damn, it's tight. 204.74 and this 206.80. So anywhere in there is sort of just range. Anywhere above there is bullish. Anywhere below there is a little bit more bearish, in my opinion, with obviously, a break below here playing for the gap fill. So anything below 203.92 is probably a gap fill play. If you take a look at, let's not get to IWM yet. Let's change the order a little bit. I want to just show you Qs. And keep this chart in mind when I discuss Apple. Qs are a little bit more weak. You can see we're still in a bit of a downtrend here. We did come up and test a bit of a look above Friday and came back in. I wouldn't say this chart is bearish just because we're back up into this area, but I definitely would say that Qs are in caution mode until we could take out the high of this reversal bar here, which is 105.03. So anything below 105.03, I think that Qs are still in a bit of a caution mode. So let's keep that in mind. IWM, on the other hand, has started to do what IWM has needed really to do for quite some time, and that is get and stay over this 117.31. I think as long as we're over that area, the 201s, the close to the 201 high is in play. Anything below there obviously gets a little bit more bearish. You can see we gapped up here over and held, and then we held Friday. So and we're starting to take out the highs of this this big wide consolidation pattern. This was sort of a bit of a diamond pattern, if you will, and we're now above it. So IWM is looking a little bit more bullish. I would say if we lose my key level here of the 117.37, it's it's a no touch. TLT, you can see we've kind of made a bit of a double top, reversed, although the reversal hasn't been super duper much. The Fed is holding rates lower for longer, the usual stuff. So I wouldn't expect some type of a really super duper hard pullback. This could be forming a bit of a cup and handle. If you're playing short, you're going to want to use this 127.72 as your stop, and keep in mind, anything over this 123.15 is expensive. That is the 2009 crash peak high. If we do take out these double tops, though, I think the old all-time reference high of the 132.20 might be in play. I'm not really in the camp of the 1% interest rates. I would not be chasing up here. I would be very cautious if you're long TLT. I would say, congratulations, you had a great year. Just book some profits here. I don't like to chase things like this when they're up high like that, just risk reward wise. But as long as the Fed's on hold, you're probably not going to see TLT get super duper crushed on a sustainable basis. Apple is one that has not been up near the all-time highs. It's actually been a little bit relatively weak. Although you can see here on Thursday we broke this little bit of a downtrend, and then Friday stopped at the old channel high before pulling back. Now, I had discussed flash crash highs and lows, and this day here is, to me, what's really the important level. If Apple can stay over 111.27, I think if you're long, you can play it. Although Friday's weakness was a little bit glaring, particularly with the volume pickup and a little bit more of an acceleration into the close on Friday. But I think Apple is probably I hate to say this, I'm going to get a ton of flack, but if it's below 111.27, it may even set up as a bit of a short for a further pullback to retest this breakout high of the 103.74. You can see here we kind of were sputtering around the 50-day MA. We formed a bit of a trend. So 111.27 to me is the key level. If you're looking for Apple to really break out, you're going to need to take out the reversal high bar. This has been a good setup in Apple in the past when we've had these big emotion range type of extension days. So I think if you could get over 119.25, I know it's kind of far away. I think Apple could see these 128s up here for the full 1.618 fib extension from the old high to the crash pullback low to possibly to this new high. So we may be doing some type of some sideways consolidation work off. You can see the stochastics are working themselves off. We're not oversold yet, but we are definitely not as overbought as we had been up here. You can see it had just been holding and holding. So I would use that 111.27 sort of as your Mason-Dixon line if you Want to try for a good right or right out play. The 50 AMA is as good a spot as any. But anyone who's watched me for a while knows I'm always cautious on Apple when it's below its 20-day moving average. We violated it here intraday. We came back up over it. We are now been closing below the 20 MA for a while, and it has served as a ceiling of resistance. So if you are a real Apple bull, for me, if you're not comfortable buying up over the 119, at least for sure over the 20-day moving average, that seems to be 113.77. So I would say anything above the 20-day is bullish. Anything below it to me is a little bit more suspect and cautious, and we might be looking for that pullback to do that retest. So I spent a good amount of time on Apple. Let's leave it at that. You know my levels. BABA. I had been talking about a break of the downtrend line or a retest of the IPO breakout somewhere between the 61.8 fib of the 97.02 and let's just call it 100, with 99.7 being the IPO day high. So somewhere in that range as being the buy. You can see we did come back down here on this day. We tested 101.20 and we had a hard reversal off of the 50-day moving average. And we've been holding over there ever since. So we did get a break of the downtrend line, and I had said that anything over this 107.95 is a long, and I took it. Well, I am in the trade. I'm long via short puts. You can see here we did have a little bit of a relative weakness the last couple days, although Friday, even as the market sold off and didn't close super strong, BABA closed on the high of the day, which is good to see when you're long. So the low of Friday came down to 108.04, so it did stop right actually ahead of where I think it needed to. I think if you're playing BABA long, it's okay to be long as long as it's over 107.95. Anything below there gets a little bit more suspect, and you can play with this bit of a mini downtrend line here as sort of as your stop, or if you want to use the 50-day as a re-entry point, you can as well, since it's held. But to me, if we lose this 107.95, these couple days would be a look above this range and fail, and I would then be looking for this thing to retest those previously stated levels. But as of now, I think it's long. My goal is somewhere up in this 115 area and possibly even a retest of this old high of 120. But again, 107.95 plus good, below not as good. Facebook finally. This thing, it's just been an absolute choppy mess. It got me long. It made me look a little bit foolish here. It did some chopping. It was looking good again, not looking so good again, and finally we got the gap fill that I have been saying I thought would happen. Let me just delete this trend line. I was playing it kind of intraday also, but it's not necessary for this video. It's just a distraction. So you can see we're coming up close to this gap fill. We're just shy of it, although we're into the gap range. I had said to take some profits at $80. The high of the day on Friday was 80. I did do a little bit of trimming and trailing. I think that Facebook now anywhere over 79.71, which was the last major high before this, I think is bullish. I do expect this stock. If any of you read my 2015 year predictions, I had discussed this thing as possibly moving to par at some point, and I'm not going to really back off from that. I'm actually fairly constructive on Facebook. Not as constructive on the rest of the social media stocks, particularly with Twitter, although we'll discuss that in a little bit. But I would be looking to take some profits here on in this gap fill range, and the key now is to see how steep or if any back off happens. If this thing I think stays over this high, which was the you can see kind of formed our downtrend, and the high of that is 78.27, I think anything over 78.27 is bullish, and you can see the pullback low on Friday stayed just above it. I think anything over the range of Friday, it remains bullish to me. Anything below there, we're back into range and gets a little bit more suspect. And then the key hold is the low, at which I think you can possibly try for a re-entry somewhere around this 76.88, which may also coincide with a little bit of a trend, although we did have a bit of a violation here, you can see, but we did get right back up above it. So those are my levels I'm watching for in Facebook. Twitter, I had discussed 35 being the range low. You can see here we had a slight violation, and then we rallied up strong. We came back up, but we did come back down really kind of quickly and retest. We held here with a bit of a higher low. 35s to me is the must hold. If you lose 35s, I have discussed having 100% retracement, possibly down to this 29.5 area. The market, I did say I didn't think that was likely as long as the market held strong. We have held strong. The 35 held. That said, this low here, this 34.95, so let's just call it roughly 35, that is the must hold. If you're playing this long, you do not want to be long this stock, in my opinion, if you are below there. Anything above there, I think you can hold. We might just chop for a little while, and then we've worked off a lot of this excess. You can see we've been trending below the lower not Bollinger, the lower stochastics for a while. So this stock is kind of heavily bombed out, so to speak. I do think at some point it could retest the high of the range. I've been discussing somewhere in the 42, 43 areas being the higher range. Maybe we do even get back up to test to the gap, although that is a little bit ambitious. I think a lot of people are waiting to see the quarter on Twitter. To me, the ideal setup would be is if this thing really did fall apart, retested down here into the 29s, right into earnings, and then that to me would be a great setup for a long. We'll discuss that as we get there. We have some time. I want to see how the thing trades. I'm not ready to make the earnings call yet, although I probably will be playing it, and I'll discuss it on the stream. So with regard to Twitter, let's just be cautious if we're long, which I think we are here. I know I still have a little bit long. I don't know about most of the people on the stream, but this thing just wants to give me the business here, right? I'm trying to draw trends for you guys in real time. Sorry I didn't have this set up ahead of time, although I just sort of saw this as I was playing around with this chart with you guys here. If you take a look, we're still in a little bit of a downtrend line here. I think if this with the high of that downtrend being where this breakdown was, so maybe there's a little bit of more room to retest up into this area. And then we kind of see what happens. We take some profits up here where the breakdown was, closer to the 39s, and then play a little wait and see. So that's how I'm viewing Twitter. I know a lot of people are long this Gilead. This was a bit of a head fake, and then it wound up working out. I think that the key level for this stock here is to stay above 105.75. That was this range breakdown, and now you can see we had a gap here and held above the downtrend, and then Friday we had some nice follow through. If you're long this stock, you want it to stay over 107.58, which was the high of this reversal bar. We did close above there, which is good. I like to see higher lows and then higher highs. So as long as we're making higher highs, I'm okay with being long the stock. I would, if you are looking to buy the pullbacks, you really want it to stay over that 105.75. Anything below there, it starts getting a little bit more dicey. Although you can see we do have a downtrend line, an uptrend line here that has been respected for the most part. There was a little bit of a violation here, and then the next day we did come right back up. So I would say that the trend is sort of valid. If you just have a day or two violation and then it comes right back up, for me that's always kind of okay. It shows a little bit of relative weakness in the stock, but we did put in a higher high here, so I'm kind of okay with being long Gilead, but with the caveat that it stays over that 105.75. GoPro, I had told you guys last week that I thought this thing was looking a little bit suspect. It was kind of breaking the downtrend line, the old uptrend line here, and you can see the stock has fallen apart a bit. However, I had discussed that this 61.8 area would be the next. At the time it was about $5 away. We did wind up bouncing there and then came back below it. I think that the breakout level of this 49.90 wants to get tested. It's roughly about $50. It's a big round strike. I think somewhere between the high of this bar, this 48.40, and that $50 could be a good right or right out play. If that gives, then you're looking at 42s, which is really where this high volume node picks up, and I would be very cautious if it trades below that 48, the 48.40 to $50 area. Anything below there, I would not be long. I would buy it there though for a right or right out type of a play, and you often see me put hashtag RORO, right or right out. That is what that means, by the way. Google has been very weak. I had said that I thought it would retest here. It actually did more than that. It came back through. It not only did that, but it broke a big secondary uptrend line that had been in place for a while. You can see a break. We may have a retest. So Google may have a little bit room higher, may have a retest of this predominant downtrend, and then this secondary, which also coincides roughly with a 20-day moving average. So to me, this stock looks a little bit weak. If you can take out this downtrend line, I think you can play long for a bit of a catch-up bounce, maybe to the 50-day moving average, possibly even up to the 550s. But this stock has been a little bit weak. I have a feeling it's going to be a little bit of it could be an underperformer for the rest of the year, just because a lot of people like to show winners, that they've been in winners for the year end, and Google hasn't really done very much. I just think the thing ran so much the last couple of years, it's just been taking a bit of a breather. You can see though on a longer time frame, and this is where I'm really looking. You can see Google is now below the lower the lower stochastic momentum bar. That has set up before to be a bit of a buy zone, although it's sometimes taken its time. I am looking to get long Google. I really am kind of hoping for a gap fill here. I probably won't get it, right? You never get what you want, which is roughly around this 444. It would be amazing if it coincided with the real primary trend line, maybe on a little bit of an overshoot to the primary trend, but I am a buyer on primary trend, or roughly around where that gap fill is. I will be a seller of puts there, and hopefully the IV will be jacked if it gets there. On the other hand, if Google, like I said, if it does break the downtrend line, I'll probably play that long, at least for a couple of points as a day trade, and maybe hold some for a swing. So that's how I see Google. It's a little bit of a choppy chart. There's really not that much there as far as I'm concerned. One of the ones I had discussed a little bit on the stream Friday, and a lot of you guys had asked me to discuss it in the weekend video. When I ask for you guys for suggestions, it's pure mob rule. So based on votes, this one made the cut, as well did the one I'm going to discuss next. So take a look at what happened here with Nike. We had been in this. We had a gap and kind of chop, and then we had a partial fill, and then came back up over the high. Anything over, I had said over this 90, I thought was bullish. It stayed bullish. It got just shy of $100, and it actually in the after hours had a spike at 99. I think it even got to like 99 or something, and then it reversed. The expected market maker move on Nike was $4, or I think it was $4.50, and it closed down like $1. It didn't close down very much. So my thinking with that is that it's considered what is known as an inside move. No, I'm sorry. Closed down $2.24. It did have a little bit more weakness. It had been down like only $1 or so, but then it closed down. But you can see. Anyway, so an inside move means it's less than what the market makers price in for options. If it's more than that move, it's called an outsized move. And that if it's up is bullish, if it's down, that tends to be a little bit more bearish. If it's an inside move, those tend to fill and be okay. You can see we held the 50-day. We roughly held these lows. You can see it's sort of a bit of a tweezer bottom we had here with a tiny slight overshoot. So I think if you want to play Nike, the play is to be over this downtrend line. If you could get over the high from Thursday, which was 97.08. If you want to play it with a little bit more of a quick entry, I think anything really over the high of day from Friday, this 96.28, might put a move back up into the highs in play. If we break the low here, I think you can play it short because you did have multiple reference lows there, and play it to at least the 90 and possibly to this 100-day moving average, wherever that is. It's right in the 87s at this point, so that would be the play for me. So long over the Friday high of day of 96.28 and short below 92.83. That is Nike. Skyworks. That was another one. Hey, what happened? Oops, I'm typing in the symbol wrong. Genius. Anyway, look at the perspective on this thing. I mean, this thing has been an absolute... a beast. The stock's a beast. Look at it. So my opinion about this is that if you're first buying it now, it's tough to say you have good trade location, meaning you're not buying. I mean, the stock is in clear air. These are all-time highs. But the problem is if any type of a liquidation break or pullback, you're kind of always going to think in the back of your mind that you're the sucker that bought the high. If you bought down here, you know you at least didn't buy the high, and you probably have a good reference low to stomach. You know, you had the gap fill. You did have a bit of an overshoot, but you were basically roughly around primary trend. Up here, you technically are in clear air. You had a gap above range here and hold. So to me, anything above this 7109, really 7109 to 7185, that really is the must hold. Anything below there, I mean, I kind of artificially drew this trend in, and I just used this these lows here to form the trend. But anything below there, to me, this would be kind of a look above and fail. Like if we gapped below here, that would be looking a little bit more toppy to me. But, you know, the stock is a beast. If you're long, stay long and use this trend. If you're already long, that is my opinion with this. Sure, the stock can go higher, but it has had a protracted rally since these lows. You did have a nice consolidation here, so I'd say a lot of the froth is probably worked off. If you want to play it long, go ahead, but just use these that reference range. To me, anything above 7109 to 7185, I think you can stay long. Anything below there, it gets a little bit suspect, and I'd be cautious. If this thing does come back down and you're long, you don't want to see more than half this bar get taken back. That would roughly be 69.21. Yeah, so you don't want to really see more of that. So if you're long and you want to stay long, 69.21 to 69.81 should be the maximum amount that you're willing to give up, and that's assuming you bought well down here. If you're first looking to initiate here, use those levels I had discussed before. So that is Skyworks. And let's end on everyone's favorite stock to either love or hate, and that is Tesla. This stock has been kind of a choppy mess, right? The problem I've had with it is it's been making lower lows and lower highs, and we roughly got to where I had said I thought that this would end, with risk if this losing this area being down to these old reference lows at the 177s. Although the extreme here of people trying to press short, to me, was getting a little bit ridiculous. We had a rally back, a gap, and now we're testing back into the breakdown level. So for me, if you're long Tesla, you needed to stay above this 217.73, this reversal bar that had failed, and now we retook it. If you can stay above there, I think you can keep playing the stock a little bit longer for maybe a retest into this 228 to like 232 area for these. Let's see, it's 233 is the 50, so yeah, somewhere around there. I think you can play for long into there if we do keep going. It would not surprise me to see Tesla back off a bit here, since there are people who did try to buy the dip here. They were right, and now they were wrong. They got flushed. Anyone who's still long here, they might want to, if they didn't take profits, get back to even. So that's how I'm thinking with this stock. I like to see this stock when it's in. I like to play any momentum stock when it's in bull mode, when it's going up. The stock is obviously, just put in a lower low, so it's a little bit suspect to me. I would be looking for possibly if you're a bear and you want to play short. I personally would prefer something on this defined downtrend line. It's from the high. It connected to this rally high. And if it would also roughly coincide with those gaps around the 245s, I don't think we're going to rally straight up there. Although with this market, you have no idea what this thing can do. It's been so strong, but I definitely think that these reference lows here are. This was actually 235, so maybe there is some type of an overshoot here. But I definitely think that this block here is going to be some resistance in the stock. And I would be, if you're looking to initiate short, look where this kind of teeters out and stops. You have some great references here with the 50 and the 200. If you want to be really aggressive, any break below the low from Friday, you can see we went down into this bar and then went back up. I think you can play that short for a little bit of a play back down, maybe for the gap fill here. But, the stock, again, take a look at the stochastics. This thing is kind of bombed out. This looks like it's starting to turn, which is usually good for the bulls, although it doesn't necessarily have to turn. It could just kind of flatline and just stay underneath, so just be a little bit cautious. My levels with that, you can see on the chart, are roughly, I would use this bar. I like big defined bars. The 221, if you can get back above like 221, I think there's maybe some more quote unquote gas in the tank. Although electric cars don't run on gas, maybe that's the reason why this thing has been not doing so well. Obviously, we all know oil has been down a lot, as has gasoline. If you really want to know why Tesla might be down, it might be because of UGA. This is the ETF for gasoline, and you can see this thing is absolutely collapsed. It is coming into a 61.8 fib, and it has held a little bit, so that might be cause for a little bit of a bounce in Tesla. So I would be careful if you're pressing short. I don't ever like to press these momentum stocks, particularly ones with high short interest, and this one has definitely grown again. My real issue, though, again, is it really needs a catalyst. I kind of really backed off a bit when they delayed the Model X, which was that gull wing, more like SUV type of a car that they're coming out with. So if that, if they have some type of a catalyst, maybe that gets the short squeeze going and you can play with that. But, again, lower lows, lower highs, not a good combination. So I'll leave you with that. Anyhow, let's have a good week. Happy holidays. If you have any questions, please message me on the stream. My handle on Twitter is @JustinPulitzer. Be sure to follow me. I respond to questions. If you like this video, please hit the like button. So that's it. Cheers.